Having a look at one of my favorite big trending stocks at the moment, which is Unx, Uranix. Okay, this is the daily chart. Okay, and I've just taken a fib set, and it's only from 2009, basically February, November, December 2009. Okay, so it's only a small part of the chart. Okay, but I've done a fib set from the high to the low. Okay, what we see on the chart here is a couple of really interesting repeating things here. We had a golden cross when we had this big run up here, okay, in the past, and we had two ranges here, or three ranges here that it repeated and did again. Okay, now over here at the moment we can see that this range here is repeated in here. We have another golden cross happening on the moving averages here, and it's only just started to go through. And this here too is end of day data from the 22nd of December 2010. Okay, what we also see is an inverted head and shoulders on the chart, and an inverted head and shoulders is a very good bottoming pattern. Okay, so it's basically saying the stock has made a bottom. Okay, that's your left shoulder here, that's the head, and there's the right shoulder over here. Okay, now to measure the target, we measure from the neckline down to the bottom of the head, and then from the breakout point we take it up there, and we basically got our 52 cents. Now these are very good at making their targets, okay, and just because they hit the target doesn't mean they're going to stop there. Okay, it's basically a bottoming pattern, and it's also a continuation pattern, a continuation of up. It filled the gap up here at 49.5, so it was a bit of a no-brainer, and it still has one smaller gap below, somewhere I think about 35 cents or something, but I'm not too phased about that. We'll just have a look at that and see if it's a breakaway on volume. To show how oversold the stock was, this is line along here, this fib line along here is the overall from the overall chart. So what I'm going to do there is in a minute is just show you the overall chart and try to explain while I'm so bullish on it, would basically be the one. Yeah, but it's all headed nicely. I would look at this here as being a 1, 2, and now we're in a wave 3 of an Elliott wave, if it is an Elliott wave pattern on the way up. So it'll do a 3 up, and then it'll do a 4 minor retrace, then go to another 5 up, is what I would be expecting. Okay, but we'll just have a look at the overall chart, and that'll explain a few things why this range is nearly complete. Okay, but there could be more to go. This is the overall daily chart here, what we have in front of us here at the moment, and this is the current range. I'll put a line along there so you can see it a little bit easier. The current range that the stock is in, so just along those highs there, along that white line, are the ranges that it's done in the past. Okay, so what it needs to do is break this here at the 55 cents. Okay, this is the overall fib set from the 10 cents low to the $2.17.5, I think it is, high. Okay, and this is where the last fib lines up here, which is basically at 59 cents. Okay, so it, from a GAN point of view, on the run up, it's basically done just over 100% retracement. So 100% is, which put it, sort of down there, was, pretty cheap buying. Okay, for 100% retracement. Okay, this is the range that we're talking about that it's repeating. Okay, but the thing to notice here, on the little run up here to try and get through that 55 before, it wasn't a big powerful move up. Okay, and the other thing is here, it was quite scattered in the way that it tried to go through that before. But if you have a look at it this time here now, it's got a lot more conviction with it, and it's got a lot more oomph and momentum behind it. Okay, so if it repeats those ranges, well, that would be getting pretty close. You'd probably expect a little bit of sideways or time off. That just might be over the Christmas break or something like that. Myself, I'm sort of looking at this, and by the way, some people are saying to me it's gone parabolic already, and I'm just sitting here going like, well, I'm looking at this here, that's not parabolic, and I look at what it's done in the past, and that's what I call parabolic, and this is what I call parabolic, okay, and that's what this stock can do, okay. Now that is just a period of 12 months there, to run from the 15 cents to the $2.17, which is a pretty good return for your money. The thing to look at here, even if it repeats this range this time, because it is, this run up here is looking starting to look more like this run up here, okay, and then it just hits its straps and goes, okay. So this little bit in here is what this is reminding me of now. So it could do this. I'm not saying it will, I'm saying it could. It's done it in the past, okay, so it's got some history. So if we drag that across, and it did repeat that range, that's what you're looking at, okay, so you'd be looking up into this here. The other thing is the stock has done a lot of time here. It's done a good near 2 years in the doldrums. And when stocks like this, and this is a nice rounded sort of a bottom, okay, when stocks do this, they generally do a lot of price, okay, so first thing they do is time, and the second thing they do is price, okay, so you have time and price movements, things to bear in mind. Also, another couple of little things to look at, there's that little gap down there at 35, I can't see it coming back to that in a hurry. And we'll just check in a minute to see how the volumes were on it, basically the one. The other thing to look at here as well, it's got higher gaps to fill. There's one up here at $1.20, low $1.13, high there, yeah, $1.20. The high there, yeah, it's around the $1.20 mark, so it's got a higher gap to fill. Okay, there, and it's also got another one here, okay, at $1.46, and has a higher one up here as well, around the $1.68 mark. And those old gaps on the way back up, you know, like it might take a couple of years, but the stock could definitely fill that there. But yeah, just looking at things here, that's why. And back here too, when it did this parabolic move up here, and the same here, this is back in 206, 207, and that was the last uranium boom, okay? When it did this little run up here, it wasn't a U boom or anything like that. It was just the stock having a run up. So timing, again, is an important thing. And last U boom, this is what it did. So have a look and just keep that in the back of your mind, and you're looking at we're in the next U boom, and it could well and truly do the same thing again. It's not going to go up in a vertical line, and it's going to take some time off, and it's going to be volatile, just for the simple reason there's not much stock out there, okay. Just quickly have a look and see what we can find on volume for that thing there. I'll just yeah, just back here again with the gap at 35, and then if we just have a look at the volume, we can see the volume's got huge the day after that gap up, so that could be a breakaway gap on volume, and it may never get filled, okay. The other things, the indicators are still going up, that's still another buy signal in here, and also Turtle Trader put another buy signal in on it as well. I'm going to come back with the monthly chart soon.